All right, let's get right into it. We're going to unpack a story that's happening at the crossroads of Wall Street and Washington, D.C. We're going to look at how some of our country's leaders are pulling in some truly, well, unbelievable returns on their investments.
So just to set the scene here, 2024 was a fantastic year for the market. I mean, the S&P 500, which is, a huge benchmark for the entire U.S. stock market, it shot up by almost 25%. So if you had money in a basic index fund, you did really, really well. But some people did a lot better than just well.
And this is where things start to get really interesting. The market, as a whole, returned about 24%. Okay. But the average portfolio for a Republican in Congress, that was up over 26%. And for Democrats, an incredible 31.1%. So both parties didn't just beat the market, they absolutely crushed it.
And it gets even crazier when you zoom in on individuals. The top-performing lawmaker in 2024 saw their portfolio grow by a mind-boggling 149%. Just to put that into perspective for you, that is more than 6 times the return of the S&P 500 in what was already a huge bull market.
So all of this really boils down to one central question, right? Are our elected officials secretly the best stock pickers on the planet? Did they just get ridiculously lucky time and time again? Or is there something else happening here? Something connected to their very unique position of power and, well, their access to information?
Let's start by digging into this winning streak. We'll look at the key players who are, year after year, just consistently outperforming the professionals.
I mean, just look at the scale of this. You've got Representative David Reuser with that insane 149% return, mostly from big tech stocks. Senator Susan Collins, she's up over 77%. And then, of course, there's former Speaker Nancy Pelosi. Her portfolio, which her husband manages, returned almost 71% in 2024. And get this, that was on top of a 65% gain the year before. Okay, so the big question has to be how? How is this happening? Let's try to figure that out by looking at one of the most famous trades on Capitol Hill.
So, back in late 2023, the Pelosi's bought what are called call options on NVIDIA, the massive chip maker. They were essentially betting that the stock, which was trading around $500 a share then, was going to go way up. And the timing here is interesting, to say the least. It came right as the U.S. government was pouring billions of dollars into the domestic chip industry. That one trade alone made them over $1 million in profit.
Now, a key tool they used for this is something called leaps. Just think of it like this. Instead of spending a ton of money to buy, say, 1,000 shares of a stock, you buy the right to purchase those shares at a fixed price sometime in the future. It costs way less money up front, but you still get all of the upside if the stock takes off. It's a high-risk, high-reward move that can totally supercharge your gains if you get the timing right.
But, it's not always just about buying the right stocks. It's also about knowing when to get out, avoiding those big downturns. In early 2025, a series of surprise tariff announcements sent the market into a complete tailspin. On April 2nd, which some people started calling Liberation Day, new tariffs were laid out, and in the next 6 weeks, the S&P 500 just plunged 18%.
So what happened right before this meltdown? Well, funny you should ask. Records show that over a dozen high-ranking officials in the executive branch sold off huge chunks of their stock holdings. Some, like Pam Bondi, sold their shares on the very same day of the announcement. The timing was, well, let's just say it was impeccable.
So, if this is all happening out in the open, why isn't anyone putting a stop to it? Well, that brings us to the rules that are supposed to prevent this kind of thing.
About a decade ago, Congress passed something called the Stock Act. Now, the idea wasn't to actually ban trading. It was to force transparency. Lawmakers have to publicly disclose all their trades within 45 days. The theory was that all that public scrutiny would, keep them honest. The problem? It's just not working.
Just take a look at the case of Representative Sri Thanedar. He bought stock in MicroStrategy. By the time he finally got around to disclosing it, which was over 400 days late, by the way, the stock was already up 193%. So what was his penalty for breaking the law? A flat $200 fine. It's not a penalty, it's just the cost of doing business.
And this is not some isolated case. I mean, it's everywhere. The failure to disclose on time is rampant. Senator Fetterman was over a year late on some of his filings. Representative Donalds failed to report over 100 transactions. It is a systemic problem of people just not complying with a law that already has basically no teeth.
And look, this goes way beyond just financial ethics. The real cost here, the thing that really matters, is public trust. And this has a direct, and you can actually measure it, impact on our democracy.
A 2025 study from UC San Diego really put it bluntly. They found that when the public sees lawmakers getting rich from the stock market, it's not just a perception problem. They called it a democratic crisis. It makes people look at the entire institution and see it as corrupt and just out for itself.
And it's pretty clear the public has had enough. Just look at this number. 86% of Americans, and that's across the entire political spectrum, Democrats, Republicans, Independents, they all support a ban on members of Congress trading individual stocks. That's about as close to a consensus as you can get on anything these days. So here's the wild part, the ultimate irony of the Stock Act. The whole point of the law was to create transparency to stop shady trading. But what happened instead? That transparency created a data stream that Wall Street immediately turned into a product. Now, anyone, you or I, can invest in funds that just automatically copy the trades of Democratic or Republican politicians.
And how have those funds been doing? Well, the ETF that tracks the Democrats, its ticker symbol is literally Nancy, is up 73% since it launched. It's blown away both the S&P 500 and the Republican tracking fund. So investors are literally betting that these politicians have an unfair advantage. And you know what? So far, that's been a winning.
All of this has really led to a major shift in the conversation. People are moving away from just talking about transparency and are now pushing for a much, much stronger solution that, frankly, many people argue is long overdue.
So what's the alternative? Well, there's a bipartisan bill called the Honest Act, and it would completely change the game. It moves from a model of just disclosing trades to an outright prohibition on trading, and it replaces that pathetic $200 fine with huge penalties, up to 10% of the value of the asset, and it closes those old loopholes like blind trusts.
So let's just quickly break down what this new proposal does. First, it's a total ban on trading individual stocks for members of Congress, the president, and their immediate families. Simple. Second, they'd have to sell off any stocks they currently own within 180 days. Third, no more hiding assets in those so-called blind trusts. And fourth, the penalties actually have some real teeth. It's a complete and total overhaul.
And really, that brings us to the central question in all of this. When the very people who are writing our laws can personally and financially benefit from those exact same laws, it creates a fundamental conflict of interest. And that conflict just chips away at public trust. So the debate now is pretty simple. Is just knowing about it enough? Or is the only real way to restore faith in the system to remove that conflict entirely?